This is George Masri, and you're tuning into another episode of the Well Off Podcast. Today, I interviewed Candice Bakx-Friesen, and we're going to get into what we spoke about. But first of all, I just want to thank all of you for listening, tuning in, and always grateful for you sharing this with friends and family. My goal is to impact people, to share a positive message, and to also inspire people to invest in real estate. So if you know someone who's looking or who might be interested in the kind of content that I'm sharing, please be sure to share it and always leave us a review because that really helps. So ideally on the Apple Podcast platform, if you can leave a review there, that's always appreciated. So Candice and we had a chance to discuss a little bit about her life. She's from Winnipeg, or lives just outside of Winnipeg, I should say, a rural lifestyle, and she's been investing for a long time. Her husband started at 17 years old. So we talked a little bit about that, getting started in real estate, and then we talked about some of the deals that she does today. One of the things that she does that's really cool is to work with credit unions. So she has relationships with a couple different ones, and she will actually get, like say, a 75% loan to value with a credit union and get the second or get a second mortgage for the remaining up to 25% in some cases, either from somebody's RRSPs or from a vendor take-back mortgage. So she ends up with no money in the deal. Really cool. I don't remember really hearing anyone doing it that way. If you're looking for a 100% loan-to-value opportunity, that may be one way to do it. So have a listen. Let me know what you think. As always, appreciate you tuning in. Enjoy the episode. Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. Today, I am here with Candice Bakx-Friesen, and we are going to talk about real estate stuff as usual. So Candice is a realtor, a certified money coach, a real estate investor from Winnipeg, Manitoba, and she specializes in helping people take control of their future through marketing, sales, and wealth creation. So we're going to dive into your story a little bit, Candice, and we will start off by asking you a little bit about your childhood. Can you tell me about where you grew up and a few things you remember from back then?
For sure. Thanks for having me. So my parents and my grandparents, I came from an entrepreneurial background. So none of them invested in real estate, but my grandparents both came over to Canada as first generation, I guess, was my grandparents. So on one side, my grandparents came as refugees, so they came really with nothing. And after World War II, and on the other side, my grandparents immigrated in the 50s. So, all entrepreneurial background, mainly farming and small business was kind of what they did. And so I've lived in rural Manitoba. I live about 45 minutes outside of Winnipeg, and have lived rural my whole life. So going to maybe when I was about 12, I see all this sort of, success, I guess you'd call it, in my family, and everybody's working hard, and my uncles and aunts, and I'm like, I should maybe figure out this money stuff. And so I was like this nerdy 12-year-old who was reading personal finance books. And, I just thought, okay, I'm gonna be a career woman. My aunt was an accountant, and she was sort of the only one from my family who had gone to post-secondary. Everyone else was doing the entrepreneur thing. And back then you didn't really go to university, you just dived into business, right? And so I just thought, I'm going to be like her, and I'm good with numbers. I'm good at math. And so I was driven to go to university, become an accountant, be a career woman. And so the big takeaway is never say never. And that's with real estate investing. And I think anything in life, because I ended up getting married at 19, and I've got 4 kids and multiple businesses and haven't looked back. So life's
Awesome.
good.
Yeah, that's great. I'm curious about what life is like outside of Winnipeg. Like, can you tell me a little bit about, how you guys are living out there? Is it just a kind of a like casual, normal type of lifestyle, or is it a little bit different out there?
I think as you get to small town, even small city, there's less of the keeping up with the Joneses and the hustle bustle. And I think people just lead the quieter lifestyle. So I think when people move, like even my brother, so he moved to Calgary for employment, and he noticed it, right? It's just a little bit more fast paced, more hustle bustle, more keep up with the Joneses, all the fancier houses, fancier cars, all that stuff. Whereas I think the prairies is it's just a quieter lifestyle, right? I don't know, maybe you're happier with what you have, or you just, it's just not that concern of, I got to acquire more and more and more all the time.
Right.
In general. Yeah.
Cool.
Yeah.
All right. So you talked a little bit about owning multiple businesses. Can we get into that a little bit? And then we'll also talk about your real estate journey.
Yep. Go for it.
Yeah. So tell me about your businesses.
Okay. So I guess where real estate investing started, and then that can sort of translate a little bit into our story. But my husband was 17, and he had multiple, jobs as a teenager, and was a good saver and had a little stash of money. And his dad just said, you need to buy a rental house. And he's like, no, Dad, like, this is all I have. He's like, no, you can buy a rental house. It's all going to work out. So, with a shaking hand, my husband was signing his first mortgage documents at 17, buying his first rental house. And he was still living at home, and he didn't need to move out. So, and of course you can acquire money a little bit quicker at 17 or 18 than you can at 15 and 16. So he ended up the next year buying another little house, and had these two little rental houses, and was living at home. And at that point was kind of when I met him. And so I didn't know anything about rentals. My parents they were entrepreneurs, but didn't invest in rentals. And so as we're dating, these are the kinds of things that we talked about. Tell me about rental properties. Tell me about life. Tell me about, And so, yeah, he just told me about why he bought a rental house, and it just made sense. So I was like, well, that's really cool. And I just thought, if it makes sense with one house, why wouldn't it make sense with way more properties? It's just multiplying what's already working. So I thought that was really cool. And of course, we ended up getting married. So he did residential stucco for about 20 years, and has since then we moved into actually farming. We both were raised as kids on dairy farms, and now we own a poultry farm. So the chicken that you buy in the store is what we raise. So so that's kind of how he ended up doing that. Purchasing a poultry farm or farming in general is very expensive. It's like buying a business for a few $1 million. And if we didn't have a big portfolio of rentals at that point, when we wanted to invest in real estate, we wouldn't have been able to, when we want to invest in this poultry farm. First of all, we purchased it with my parents, but coming up with a lot of cash like that would never have been possible for us. But because we had the rentals first, then we were able to refinance and use that money. So what I always preach, when I'm helping people with buying properties, is like, this gives you options. And if you can have options in life, that's where you want to be, right? People talk about the freedom and, eventually I can retire whenever I want to, and that's their goal. It's never been my goal because I love to work, but it's the freedom, right? It's the freedom to be able to, now that we could end up buying this business, right? And it was tough for about 5 or 7 years, but it gets easier over time. And I think that's anything in life, whether you're starting a business or buying a rental property, it's scary, it's hard, things are difficult. You got to put in a lot of hours when you're starting a business, but if you stick to it, things end up working out.
Of course. Yeah. Well, that's awesome that you guys started at such a young age, 17 years old for your husband. Interesting that you ended up in poultry farming. That's totally different from real estate investing, but that's cool. So I saw that you're also a certified money coach. Can you tell us what that means and how you help people?
Yeah. So what I did was after going to university, I completed my Bachelor of Commerce, but obviously decided I didn't want to become an accountant anymore. And so I worked in a bank for about a year, and then I was a mortgage broker, and then ended up stumbling into real estate, and somebody had approached me and said, hey, like, I'm starting a real estate team. Do you want to join? And I thought, well, if it's a team, like, sure, there's so many realtors out there. I don't know if I would have ever thought of it otherwise, but the fact that it was a little bit of a team, I was like, okay, well, that's a little bit more secure, and we're working together and stuff. And the team ended up not really working out, but never looked back. And so I'm a top producing agent in my market. But again, things always go full circle, right? And so having that interest in personal finance and being a real estate agent, you end up really connecting with people. And I know you said you were a realtor too, and you connect with people in a deep way when you're helping them sell their houses. Or their house. And sometimes people just think of real estate as the fun times, but you're dealing with the death, the divorce, and the really tough moments in people's life, and you get really connected in a deep way sometimes. And so people would just turn to me and say, you know what, Candice, like, can you help me with this money stuff? I feel like you will know about this stuff. Can you help me with this? Can you help me with that? I'm getting an inheritance. What should I do with it? And so, I think it's just sometimes in life, listening to what people are telling you and the feedback that comes back. And so when people say, oh, you're really good at this, or, not to just brush it off, but to say, okay, is that something that I should be exploring? Is that a way that I can help more people? Right. And so, so that's where the money coach piece comes in, whether it's somebody who's looking to invest in a rental property, or it's, I'm struggling, I'm going to lose my house, I don't know what to do right now. Just be able to really focus on helping others, because, I've been really blessed in my life, and it's sort of, you get to that point where you're like, okay, you know what, now it's time to really give back. And I always have, but, it's my intentional focus every day of who can I help today? Who am I meant to help today?
Mm-hmm. Cool.
Yeah.
Well, that's great. It's nice to have that attitude of giving back and helping people. And I'm sure that served you well for the last couple of years, I'm sure. So let's get into a little bit of your real estate holdings. So obviously you've been investing for a long time. So what kind of properties, you were kind of telling me about investing in rural parts of Winnipeg or Manitoba. Can you tell me a little bit about what kind of properties you target and what your strategies are?
Sure. So the first couple properties that my husband owned, because we live rural, what that means is that a lot of the smaller towns around us are maybe 1,500 people, 3,000 people, 500 people. The nearest larger, in quotes, larger city is about 15,000. So we're talking all very small town. And that's what we know, and that's what we decided to invest in. So there's opportunities everywhere, and that's the beauty of real estate. When the market crashed in 2008 in the States, a whole pile of people went and invested in that. That just wasn't our thing. Like, we want to be able to drive past our properties. We want to know the people in the communities who are potentially going to be renting from us. And there's benefits to small town with things like that, right? You can ask the neighbor, hey, do you know this guy? And likely he might know somebody who knows that person. And so you get a little bit of a better feel on the tenants. And the quality of tenants overall has been really good, and we're really thankful for that. Mm-hmm. But so, and of course there's going to be negatives too, in terms of, appreciation might not be as high, or, the values aren't going to go up as much maybe in rural compared to in a city, and different things like that. But whether it's investing in the States after the crash, or whatever you're looking to do, Airbnb, or obviously student rentals isn't popular now, but it was really hot for a while in Toronto. And, whatever that is, there's always opportunities. It's just what you want to focus on, what you're comfortable with, risk return of, what you're looking for, and really taking action. So.
Well, that's really cool. Sorry. So how far away from Winnipeg are you investing? Sorry, I'm not sure if you touched on that already.
No, that's okay. Yeah. So we live about 45 minutes away. And so our rental properties are all sort of within an hour of Winnipeg. For a lot of people, that's a fairly easy commute. So we do have people who will still work in Winnipeg, but they're leaving the city to, again, go after that quieter lifestyle, whether that's, less crime or smaller schools, or, I get to know the neighbors. Sometimes when I sell a property, people are like, somebody popped by from next door and brought me a pie. And that's weird, right?
Yeah,
But
yeah.
it's normal in small town, right? There's just that, we're going to help out the next guy and friendly, all that kind of stuff. So yeah, so it's been really good. What we
Yeah.
started with was our 2 rental properties that my husband had, and we ended up selling one of them when we got married to buy, our house instead, because we didn't want to live in that exact house and wanted to move a little closer to Winnipeg for jobs at that point, because I was thinking of becoming an accountant and stuff. So, but anyway, and then, this opportunity came up, and my husband's dad, my father-in-law, said, "Hey guys, there's this 5-plex." And my husband's like, "Absolutely not." And I'm like, "What's the difference?" Again, it's 5 instead of 1. If 1 works, if the numbers work on 1, it'll work on 5. And he's like, "I don't know." He's like, "We don't even have the money." So I approached my mom, and I just said, "Hey, we're looking at doing this. Like, would you want to invest with us?" And so kind of without even realizing, because I didn't go and spend, $50,000 on education or anything like that. It was really just, let's just learn as we go. And of course, people help you along the way. But yeah, anyway, so I just started just kept going till I found the money, right? And so I started with my mom, and of course that ended up working out. So then, because she believed in what we were doing and I could show her the numbers. And so we ended up getting a private mortgage for that building. But the property had enough room that we could actually do another building on it. And so, but we still didn't have the money because we were like 20 and 24. And so I'm going to keep looking, right? So I called up my grandma on my dad's side, and like, "So grandma, kind of thinking like we'd like to do this building." And of course, being entrepreneurial, my grandma's like, "Yes, this sounds great." Now I'm supporting my grandkids in their vision and their businesses. So,
Cool.
so we ended up building a building with private money again. So we had 2 private mortgages. And then after about a year, my grandma wanted to be paid out. So we ended up getting financing and paying her out on that. But yeah, money can be a tricky one, right? Especially with family. So sometimes that works, sometimes it doesn't. But I think it's just so many people struggle with the concept of money and the emotion around it, that if you're asking for money, you're in trouble, or you're struggling, or you're embarrassed. And if we just look at money as a tool, no different than, hey, like, I need a vehicle. Who can borrow me a vehicle, right? Right now, I need the money. I'll pay you a return. There's a benefit for you as well in this. So if we look at it as a tool instead of the emotional part of money, we can get so much further with our investing.
Absolutely. Yeah, there was just one thing I wanted to share with you about the pie, the neighbor bringing over the pie. I just moved into a home. So my first experience with one of the neighbors was awesome. They were super friendly and everything. The other neighbor was not the nicest person. Like, first thing they say, not very nice things to us. So it's interesting that you say that. I don't think they'll be delivering any pies to us. That's for sure. Yeah. So I want to ask you a little bit about the kind of returns you can expect in the markets that you're in. Are you seeing any growth in the prices or in the values, I should say, or are you more so focusing on cash flows? And if so, how much cash flow are you generating? Typically, is it a substantial amount or is it small amounts in your market?
Yeah. So if we look at some of the bigger markets like Toronto and Vancouver, you're going to see high appreciation, but you can also see the drops. And the prairies is much more slow and steady, wins the race. So when we have investors from Toronto looking at a 2% appreciation, they're like, "Why are you bothering?" But there's also, again, it's the risk and return, right? So you don't have as much return, but your risk is also less too, because we don't have these massive drops in the market that would cause a lot of us from Manitoba stress that you guys are just kind of used to, because you know it's going to happen, right? Sooner or later it's going to go up, sooner or later it's going to also go down. And yeah, so we're a little bit more that slow and steady wins the race. So we don't have huge appreciation in our market. There's always opportunity. So if you're looking at a strategy where you find a really good deal and then you end up doing the BRRR, right? Or whatever type of take on that because there's a few different versions. But,
Mhm.
if you're going to buy it and fix it up and then refinance it and actually keep it just to rent it out, then of course your return is higher, right? Because you've forced that appreciation. So I think it depends again what you're looking for. Are you looking for the work, or do you have the time to do the work? Are you just looking for a really simple buy me a rental property that's, low maintenance? There's just so many different opportunities, but you just have to decide what you want. And then when you decide that, then you're going to find what you're looking for.
Right. And is there pretty decent cash flow in the market, or is it more or less, break even?
Yeah, a lot of times you're going to find mostly, break even for the average deal that you can find on MLS. If you go into multifamily, of course, you're going to find better returns than if you're getting a single family home. And again, it depends on what area. If you're looking at Winnipeg, if you're going to find bigger returns in an area where maybe your clientele, your tenant profile is not as strong, right? So you can get decent returns, but then you maybe don't have the greatest tenants, or the areas are a little bit worse. And some people want to invest in areas where they're renting to executives and not getting as much cash flow, but then have a great tenant profile.
Right. Okay. For someone like me who doesn't know very much about Winnipeg, in fact, the first thing I ever kind of found out about Winnipeg is that the hockey chant is "Go Jets, go! Go Jets, go!" Because I heard it at a bar once. But anyways, what would draw someone into the Winnipeg market? What's the draw? Like, why would somebody want to invest there?
A lot of times people from outside of Winnipeg really appreciate that the average sale prices are so much lower. So you could come here and buy an average house in Winnipeg is about $330 right now, $330,000. And that would be a nice bungalow in a good area. Of course, you can find properties for $125,000 that are not going to be in the greatest area, but you can rent them out and get a decent return still, right? So sometimes it's looking at that, where you can purchase more properties and diversify a little bit. Or again, if you're going to go buy one house for 1.2 million in Toronto, or you can come buy a whole apartment block here for 1.2, there's trade-offs, right?
Sure. Just out of curiosity, so for that, let's use those two examples. You said $125,000 property in a not so great area, or a $330,000 property in a decent area. What kind of rents can you get for those two options?
So for the house, you'd be probably looking at about 2,500. If you're
For
getting
which one?
into
Sorry,
for the nice,
for the nice one,
300,
the 330, 2,500. Okay.
Yeah, about 2,500. And then for the lower area, probably, I'd say 1,000. Now, again, I don't invest in Winnipeg heavily. I'm more rural, but just using these examples from Winnipeg, probably about 1,100, I'd say.
Okay.
So
just based on these numbers, you should be cash flowing a little bit.
Yeah.
Yeah, just a touch on that. So that's pretty decent for someone, especially someone maybe who wants to invest for the first time and they don't have a lot of money. Maybe they have 25, 30,000. This could be an option for them.
Yeah. Or if you're going to do a vendor take back or a second mortgage for maybe the down payment. So maybe you can get a conventional mortgage for 75%, and then there's enough cash flow to be able to pay an investor and not have to put down as much if you can find somebody to do a second mortgage or that sort of thing. So
and the first mortgage, would that be with one of the big five banks, or in that case, or would it be with like another private source or a B lender or something?
Yeah, typically a lot of the big banks don't really want to have a second mortgage attached to it. So what we've done is grown our portfolio with credit unions. So in Manitoba, credit unions are a lot more flexible. And so if you don't have that option, you might have to go to get a conventional, and then maybe get the investor after that, after you've already placed the first mortgage. But we've done a lot of creative stuff where we've had an investor do the second on the property for the 25%. And so we've basically done 100% financing.
Right. So just to elaborate on that credit union thing. So you were saying you'd get a 75% loan to value with the credit union.
Yeah.
And then you would get an additional, what, like 10% or something from from a private lender as a second loan or something like that?
You could do anything you want. That's again the beauty of real estate. But just as an example, one deal that we did. So I'm basically an opportunist, and I don't really focus on one type of real estate. So from our single family to multifamily, we have some commercial, some multifamily. We do private financing. RSP lending, we've got funds through RSPs. We do rent to own. So it just sort of depends what comes up. And so for one of the deals that we did, it was a rent to own on a home. And my husband and I doing this chicken farm thing. Our debt was like super high because we refinanced everything. We didn't have extra cash just floating around. So I approached this woman that I knew and I said, hey, I want to do this rent to own deal. You have money in RSPs because we had been talking about it. And would you be interested in investing in this? And so you would be the second behind the credit union and we'll pay you a return to your RSPs. So she's like, sounds good. Obviously we would pay her a decent return on that money. And so within the rent to own deal itself, again, you're creative, right? So we made all the payments kind of work out so that we could pay her return. We could still pay the credit union. And we knew what the end game was with the rent to own and what we would be making at the end. So rent to own is a nice option where you can kind of figure out what the deal is going to look like and you kind of plan that out ahead of time, right? Mm-hmm. So that was just one example where we used RSP money and we didn't put any money in.
Sweet. Okay. So I just want to recap that. So you might have a situation where you'd get a 75% loan to value mortgage from a credit union.
Yeah.
And the remaining 25% in this situation, you went to someone you know who had some money sitting in RSPs and you said, if you loan me 25% of this property and RSP from your RSPs, I'll pay you X percent. Yeah. And that way you have 100% loan to value total mortgage. You don't have any money out of pocket. And the credit union's okay with that because, I don't know, I guess that was just their policy. But if you were to go to the bank and say, hey, this is what I'm doing, they'd say, no way. You got to have at least 20% of your own cash in this deal, correct?
Right.
Yeah. Yes. Yeah. That's interesting. I like the way you did that. That's creative.
Yeah. Yeah. And so why would this, and so I want to answer the question that maybe some of your listeners have. Why would this crazy friend be willing to loan to 100% loan to value? Mm-hmm. Number one, she also knows the market because she's also from the same area. So when I say that house is the house I want to buy, she's kind of aware, right, of the property values. Most people, they sort of know what properties are going for in their neighborhood or the town or the area, and the trust in me, right? So she trusts me as an investor because I've proven myself. She can literally see properties that we have, so she knows that, and she knows the area. So there's the comfort level. So when you're looking at, okay, I want to do what Candice was talking about on the podcast, day one, yeah, that's going to be a little bit harder because you don't have the experience, you haven't proven yourself, and you don't maybe have the net worth. We didn't have the net worth at 19 and 23 when we started that we do now either, right? So some of these things become easier over time, but I just always want to give people the hope and make them recognize that you can work past a lot of your challenges when you know that other people have done it too. Mm-hmm.
Yeah. Yeah. And for sure. I was just going to ask you, did you have to use another property as collateral in that situation to be able to go up to 100%, or was it unsecured? Well, I guess it was secured to that specific property, right?
Yeah. So we secured it. Yeah. So it was a brand new home. The yard wasn't done. The basement wasn't finished. And so that's where I also just said to this investor, if things don't go well with this rent to own and they do leave, then our intention is to finish the basement, finish the yard, and the expected sale price would be this, right? Mm-hmm. Since then, the values have gone up quite a bit more than what I would have forecasted because land values went up, etc. So now we probably could sell it for about 20,000 more than I would have said 2 years ago.
Right.
We could have sold it for. Yeah. So that ended up obviously working out okay. That, rent to own is one of those things that we do because we really believe in home ownership, obviously with my job and investing. So I want to see people get into homes. Again, my whole legacy is that I want to help as many people as possible on this earth. And so if you can help people get into a home that they wouldn't have otherwise, that's sort of why we do rent to own. And so I don't want to see people forfeit. I don't want to see people not make it with the rent to own. If it happens, these deals are set up where, I can turn around and sell the house again, because again, I know the market and I'm going to buy a house that I know is saleable.
Mm-hmm.
Yeah.
Awesome. I love what you're doing. And I just keep going back to this whole credit union thing. Did you like develop relationships with credit unions directly, or did you do it through a mortgage broker that then connects you with the people that they know?
Yeah, we started with credit unions, and both of us as kids banked with credit unions. Our families had histories with credit unions. And I would say 20 years ago that mattered. Now, you're kind of a number, just like with banks. People feel that if you've been banking with somebody for 30 years that they care. They don't, right? You're still just a number, but there's still that thought out there that the bank is going to help me because I've been so loyal. Mm-hmm. So that's just something to kind of get your head around, and just to really be fighting for what you want and to go out there and keep trying, because just because one bank says no doesn't mean the next one will. And so in the beginning, I would say definitely relationships did help. And when we were young, and I was a summer student, and we were buying our first house, and it was super tight, and I was like, okay, but banker, us, and my parents, his, like, could you just somehow make this work? And I think she kind of squeaked it by when probably it was a little gray. Yeah. So I'd say 20 years ago, definitely that did help us when we were buying our first house. And but yeah.
So now you don't, like, do you still call the credit unions yourself, or do you do it through a broker at this point?
No, we have established relationships. We're happy with what we have. Mm-hmm. When I get a renewal on one of our properties, I'll still always call a broker, and I will still always renegotiate to get a lower rate than what they're offering. So am I, again, loyal to them to an extent, but not really. If I wouldn't get what I wanted, I'd definitely just go somewhere else and flip some of the mortgages out of there. But when we were purchasing the farm, it was a little easier just to have sort of everything there. And then, they did definitely help us, and they've made their return, obviously, for doing that in the meantime.
Right. Awesome. Cool. Well, I think we covered a lot of stuff here. Is there anything else you'd like to add before we move on to the next section?
No, I think that we have covered a lot.
Yeah. Okay, perfect.
If anyone has any questions specifically, feel free to reach out. So.
Mm-hmm. Yeah, I'll post all your information, like for your website and all that, in the show notes. Okay, so let's go on to the random 5. I'm going to ask you 5 random questions, and you just tell me the first thing that comes to mind.
Okay.
Okay. Number 1, what should parents stop teaching their children?
Well, what I would say is that I think I've got 4 kids, so I can say we as parents, but I think in general, parents are just trying to be too safe. They're trying to protect their kids way too much. And when things like this pandemic come around, and now it's a pandemic, the next time it might be, the crash of 2008, things are going to happen in life. And we need to, instead of trying to protect our kids, build resilient kids. And so when this pandemic came, we said, okay, we're going to not shelter them, but we're just going to live life as we were yesterday, as much as possible. So you know what? Things are a little different, guys, but let's carry on. So what are you working on right now? What do you need to do with school? Continue on with jobs. My kids have little kid businesses, so we continue with that. And as much as possible, nothing really changes, because as soon as we feel the fear and we project that fear to kids, they feel it too. So we have to be really careful what we're saying, what we're watching in the house, what we're reading, and make sure that we're showing up the best we can, and our kids will pick that up from us.
Awesome. Cool. Okay, number 2, what says the most about a person?
I would say how authentic they are and what they value is probably what I look for first in a person.
Cool.
Yeah. So if I'm going to invest with somebody, I want to get to know them before I just kind of check. So if somebody's like, hey, I've got this great deal, I'm like, okay, great. But who are you? Who are you as a person? What matters to you? What makes you tick?
Right. Yeah. Have you started doing that? Have you started passively investing, like, being the passive investor in a joint venture or something like that?
No, we've really just focused on our own properties. So because we're already real estate investors, we'll just likely continue on with that unless it's kids or, a niece or nephew or somebody where we're kind of pouring into them. So I give back more with helping people reach their dreams, but financially we haven't really poured into them because we're doing our own projects. So what I typically say to people is often you want to find investors who aren't already investors, because somebody who's a business owner and they're really focused on their business, they don't want to get into rentals. That's just another hassle. They want to stay focused on that. So you want to look for people like that who they're interested in diversifying their portfolio. They like what you're doing. They believe in the project, but they're not going to get involved, right? And like an investor typically will. So so that's kind of where we're at.
Awesome. Okay. Number 3, what's your best life hack?
I think honestly, if you can avoid debt as early as possible in life, you're going to lead a better life. And if you really are true to yourself and you know what is important to you, you're also going to lead a better life. So I think the earlier that you can figure that out and, be the wise soul maybe out there, but, the sooner you can figure that out and not be dependent on other people for your happiness, the further you're going to get in life. I think a lot of people spend a lot of money in life just trying to impress other people. Or, even getting married. Well, I got to go spend $50,000 on my wedding for one day because of this like fairy tale wedding that I need to have. That's like Cinderella or whatever, right? Like all these things that like really is it. I think if we could always ask, like, is this the wise decision? And just really focus on the people that you surround yourself with that are just authentically great people. And focusing on the experiences of life and life is so short, right? If we could just spend time doing things that we love with the people that really matter to us, and not be distracted by the rest of it, I think that that's a huge life hack.
Yeah, absolutely. Yeah, I got married this year, and one thing I told my wife was we are not spending $50,000 on our wedding. And this was before COVID and all that. So it forced us to make our wedding a lot smaller, but I agree with you on that.
All the guys were like, we'll do the COVID wedding. All the guys.
For sure. No problem. Yeah. Number 4, if you owned a restaurant, what kind of food would it serve?
Oh boy. These are random. I would probably have a coffee house. I absolutely love spending time with people in coffee houses. And I would say that is, again, one of the things I've missed the most with this pandemic is when the shutdown came, I missed getting together with people and just chatting and interacting, pouring into people, and having the same back, right? So I would say a coffee house. It's got a great atmosphere. It's casual and probably fairly easy to manage.
Awesome.
Yeah.
Cool. So the last one is not random. I actually use it every time, but what success principles do you live by, or do you live by?
What we did from early on was we tried to invest one of our incomes in rental properties or in savings. So we tried to invest one income and live off the other income. Mm-hmm. That got trickier as we had kids. Kids are expensive, and different things came up, and we started businesses and stuff like that. But yeah, we just, again, we don't have the vehicle debt. We would drive used vehicles. Now, being a real estate agent and rural, I put on about 80 to 100,000 kilometers. So there's no point having a nice vehicle anyway, because it depreciates.
A year? You're doing that much in a year? Whoa, that's a lot.
Yeah. Yeah, so I've only got a vehicle for a few years anyway. So we buy used vehicles, and my husband bought, I guess, his second new vehicle, but it was a killer deal. Otherwise we wouldn't have, right? So again, just making those smart money moves, I think, has been a principle that is really important to us and has served us well. Awesome.
Yeah. Okay, so that's it. So what's the best way to reach you, and what services do you provide?
Yeah, so if people want, my name can be a little bit difficult, but if you search me by my name, you'll find me. Like any realtor, you really can't hide. So CandiceBakx-Friesen.com, or if you want to specifically talk rental properties, money coaching, all that kind of great stuff, then it's InvestorSmarts.ca.
Awesome. Okay, I'll be sure to include your information in the show notes. Candice, I appreciate it. Thank you for sharing all the good stuff, and I look forward to speaking with you again soon.
You bet. You're welcome.
Thanks once again for listening to another episode of the Well Off Podcast. Just want to remind you that if you do appreciate the content, all I ask is that you comment, maybe like it if you can on the platform that you're listening to it on, and finally share it with friends and family. I'd love to get the message out there, and it would mean a lot if you can share it. And finally, I just wanted to offer you, as a valued listener, a free copy to the Roadmap to Real Estate Investing, which is a document that I've put together which helps you identify what strategy would best suit your needs at this current time. You go over certain things that are included in this document step by step, and it'll hopefully provide you with some clarity. So have a look. You can go to www.welloff.ca/guide to download your free copy.